Meet Ben. Ben is the in-charge on the Associates R Us engagement. One of his responsibilities is planning the audit of the Investments and Equity Affiliates line item in the balance sheet. Ben wonders,
what types of investments are included in this account?
Ben decides to ask for help from his manager, Paige. Paige explains that when a company invests in the common stock of another entity, the accounting depends on the degree of influence that company, we'll call them the investor, has over the other entity, we'll call them the investee.
First, we need to determine whether the investor is subject to specialized industry accounting guidance, such as the guidance that exists for investment companies or broker-dealers.
Paige explains that these types of entities typically account for all their investments at fair value, with changes in fair value reported immediately through the P&L.
What if specialized industry guidance doesn't apply?
In that case, we need to look at the influence the investor has over the operating and financial policies of the investee.
She goes on to explain that if the investor has no influence over the investee, the investment is usually accounted for at fair value under ASC Topic 320 and reported within the investments line item on the balance sheet. The accounting for subsequent changes in fair value depends on whether the security is classified as trading or available for sale.
However, this topic only applies if the underlying shares have a readily determinable fair value.
What if they don't have a readily determinable fair value?
In that case, the investment is usually accounted for at cost under ASC Topic 325.
However, the accounting for investments under ASC Topic 320 or Topic 325 is not covered by this e-learning module.
Sometimes, an investor actually controls the financial and operating policies of the investee. In this case, consolidation would apply with the investor fully consolidating the investee's results into their financial statements. The investee is essentially a subsidiary of the investor.
Paige explains that there are two consolidation models within ASC Topic 810, one for variable interest entities, otherwise known as VIEs, and one for voting interest entities, typically referred to as VOEs.
What happens if the investor does not own 100% of the outstanding shares?
In that case, the portion not owned by the investor is accounted for as a non-controlling interest, a separate account within shareholders' equity.
However, the consolidation of subsidiaries and VIEs under Topic 810 is outside the scope of this e-learning module.
So what types of investments are included within the Investments and Equity Affiliates line item?
Basically everything else. Or more specifically, investments in which the investor has significant influence over the operating and financial policies of the investee.
Typically, these types of investments are referred to as affiliates, associates, or equity method investees and reported as a separate line item in the balance sheet and income statement. Significant influence is usually indicated by equity ownership of between 20 and 50%, but this presumption can be overcome.
How are these investments accounted for?
They're accounted for using the equity method of accounting prescribed by ASC Topic 323. The firm has a great e-learning training module on this topic, and I recommend you take it before diving into your audit procedures.